going on, guys? This is Dan French. We're talking interest rates. We're talking mortgages. But not today. Today we're talking about mortgage insurance and why that's so important and how that can help you get into a home. Stay tuned to this video. I'm going to tell you why it's so important.
Perfect.
Hey guys, this is Dan French. I'm talking mortgages, I'm talking interest rates, and I'm talking mortgage insurance. Mortgage insurance, why is that a good thing? Well, I had a buyer recently come to me and say, Dan, I would have called you sooner, but I thought I had to put 20% down. And I said, what made you think that? They're like, well, I didn't know how much really I needed to put down, and I didn't know what the minimum was, but I heard out there it's 20%. But that's false. So the misconception is people are out there looking online, maybe getting the wrong information. I know there's a lot of people out there that are really doing their research on interest rates and mortgages and how all this works, and that's fine, but there is some misconceptions out there of having mortgage insurance and why it's a bad thing. I'm going to tell you guys why it's a good thing and really why it could help you get into a home. The average homeowner, if you look at over across seas or in other countries, the minimum down payment for a lot of these countries is 20 to 40%. Now, they have a very low default ratio. You're putting 20 or 40% down of your own money. I promise you're probably not going to default on that home. So, to minimize the risk and to allow everybody out there as an American to get a home, they said, okay, we're going to put mortgage insurance in place, and we're going to allow a buyer out there to put 3 to 5% down minimum, and then they'll carry mortgage insurance. Now, that mortgage insurance is part of your mortgage. It's a part of your payment. And is it something you can get back? No. So yeah, there's a couple of negative things about it. But the positive is that you might become a homeowner and build equity. And now you're in a property and you're making a payment and you're not going to have it forever. There's 4 ways to remove mortgage insurance. And that's why this is what I'm going to talk about on this first video. This first video is about removing mortgage insurance. I'm going to have 2 other parts besides this video that we're going to talk about mortgage insurance and the difference of mortgage insurance and how it works. So the first part is, what happens when I get enough equity in my home to remove it, and when can I remove it? Well, at 78% equity in your home by natural paydown, mortgage insurance will automatically drop off by law. When did this get in place? Well, 1998, they had the Home Protection Act come in place and say, if you have 78% of equity in your home by natural pay down, naturally you paying your mortgage down, it will drop off by law. Now, what does that mean? If I have a $100,000 mortgage and my mortgage has $78,000 left on it, by natural law or natural pay down by law, it will drop off. At 80%, you could request it from your servicer or your mortgage carrier, right? Any carrier that you have, anybody that holds your mortgage, you could call them and say, I have 80% equity in my home and I want to remove it. They're going to say, well, let's think about it. We'll talk to you and we'll get back to you. So that doesn't mean it's definite. So what do people really do with that? They refinance their home, and that's why I have a high amount of refinances going on, because at 80% or even less, a little bit less, let's say you have 17% equity or 18% equity, by ordering that appraisal and doing a refinance, that mortgage will be automatically paid off. So what that means is you're replacing your current mortgage with a mortgage that I give you, and then you don't have to worry about your servicer actually saying, yeah, let's go ahead and remove insurance. Now, in some cases, we have what's called a property appraisal waiver. And then in those cases, you don't even have to order an appraisal. So that's a really good part of it. Now, I had another buyer call me recently. I got him into a loan 2 years ago, and they said, Dan, I want to remove my mortgage insurance. I really believe my property has a lot of equity in it now. And I said, well, how did that happen? And he goes, well, I bought a distressed property, and the property itself had a lot of work to be done. So there was $60,000 to $80,000 of money and really work that he put into the property that really put a lot of value back into the property. And guys, you could actually get mortgage insurance removed if you have proof. You show receipts, you put a lot of money into it, and you show that you've actually built equity by buying a property that was really distressed, and now that it's built up, now you put a lot of money into it, you can go and say, hey, I want to remove mortgage insurance. That's another way. So I also had another person come to me and say, Dan, I want to remove mortgage insurance. And one of the things you have to look at is, can you remove mortgage insurance at 80%, as we talked about? Yeah, by your servicer for sure, yeah. But your servicer has to accept that. Now, at 25% equity and ordering an appraisal and showing that you have 25% equity in your home, that's another way. You have to prove it, but if you have less than a 5-year period and you put in that you have 75% equity at that time and you order an appraisal, then yes, they can request to have that removed as well. So there's about 4 ways now that I've explained to you that you can remove mortgage insurance. You know, you look at, why is this so important? Well, a middle-class person, this might be the biggest investment they make in their lifetime. And, you know, having these options, knowing that you have mortgage insurance, yes, it's something that does cost money and it's not something you want to pay up front. Nobody's going to be happy about it. But guess what? It might be the only way for you getting into a home, and there is some good sides to it. So I don't know all the answers, guys. I told you, you know, there's a lot of videos I'm going to be putting out. If it's something I don't know, I will immediately get you back the answer. Please subscribe to my channel. Please also follow me on all social media platforms. I'm putting out a lot of information on what's going on with the direction of the market, interest rates, a lot of information on just different programs that's going on.